China just shifted $8 trillion. $8 trillion. That's bigger than Germany's entire economy. Bigger than Japan. Bigger than the combined GDP of every country in Africa. And they did it in a way that's set to crush Western markets. Not could crush, will crush. Here's the part that should scare you. This same kind of move has shown up 3 times in recorded history. Same pattern. Same sequence. Same brutal result every time. No exceptions. No mercy. Over the last 24 months, China has quietly reorganized roughly $8 trillion across foreign holdings, reserve assets, and trade arrangements, following a coordinated play that only makes sense if they're gearing up for full-scale economic conflict. The West is treating this like routine financial shuffling, China doing what China does. Another headline that won't matter. That view is dangerously wrong. Because there's a 4-stage cycle that repeats whenever a rising power challenges a dominant empire economically. It's repeated for centuries. Across continents. Across civilizations. And we're not in stage 1 anymore. We're not in stage 2. We're deep in stage 3, the point where the collision starts to look mathematically unavoidable. By the end of this video, you'll see what's unfolding. You'll understand why Western investors who miss this pattern are about to get wiped out. And you'll know when it's coming. Let's walk through the pattern, the one they don't teach in standard economics classes. The one that gets scrubbed from history books because it's too dangerous to acknowledge. 4 stages. Same order. Same ending. Stage 1 is the foundation of mutual dependency. 2 major economies become tightly linked. Trade volumes explode. Each side convinces itself it can't function without the other. Economists publish papers about global interconnection, arguing conflict is impossible because the ties are too deep. Money moves easily. Goods flow nonstop. Both sides profit. Politicians talk partnership and cooperation. Everyone relaxes. Everyone assumes it's permanent. It never is. Stage 2 is asymmetric accumulation. One side starts stacking strategic advantages while the other drifts into complacency. Surplus nations pile up huge reserves. Deficit nations pile up huge debt. The balance of power shifts quietly, slowly, subtly, almost invisibly. The rising power saves, builds, and prepares. The dominant power spends, borrows, and assumes until one day it's obvious. Until the shift has already happened. Until reversing it is no longer on the table. Stage 3 is strategic repositioning. The rising power realizes it has gathered enough leverage. It begins to reorganize, diversify, build parallel systems, and prepare for separation. It does it quietly, no announcements, no press conferences, no warnings, while keeping the appearance of cooperation, smiling through diplomatic meetings, signing agreements for the cameras. But behind the scenes, it's preparing for war. Not military war, something worse. Economic war. We're living in that moment right now, and most people have no idea. Stage 4 is the controlled demolition. The rising power doesn't stumble into collapse by accident, and it doesn't happen as some unintended consequence. It's triggered on purpose, deliberately. The dependency they spent decades constructing becomes the weapon. Economic pressure gets used to force political outcomes. They can inflict damage without firing a single shot, and the established empire can't answer back. It's boxed in by its own debt, its own consumers, its own system, its own arrogance. So it collapses not militarily, but economically, which is worse, far worse, because there's no battlefield to push back on. You can't fight it. You can only watch it happen. You can only absorb the pain. This cycle has played out 3 times in modern history. Same order, same stages, same ending. So listen closely, because the details matter. The timing matters. The sequence matters. England and Germany. 1900 to 1914. England was the global superpower. The British Empire controlled a quarter of the planet. The pound sterling served as the world's reserve currency. Major trade settled in pounds. London was the hub of global finance. Britain looked untouchable, permanent, unstoppable, eternal. Germany, meanwhile, was rising fast, industrializing at speed, expanding manufacturing capacity to rival Britain's, building wealth, growing stronger year after year. Stage 1 was in place. The 2 countries traded heavily, commercial ties were enormous, and both sides got rich. The relationship looked permanent, profitable. unbreakable. British newspapers talked about an age of lasting peace through commerce. Politicians claimed economic interdependence made war impossible. They were wrong, catastrophically wrong. Then Germany made a strategic choice between 1,900 and 1,910. They overhauled their foreign reserve approach. They cut their British pound holdings by 60%. 60%? That isn't a small tweak, that's a major repositioning. They shifted into gold instead. Thousands of tons. Building the largest gold reserve in continental Europe. At the same time, they expanded trade relationships with Russia, Austria-Hungary, and the Ottoman Empire, creating an alternative economic sphere, an alternative system, a parallel structure. Britain didn't see it. They were too confident, too comfortable, too arrogant to recognize the pattern. Stage 2 was confirmed. Asymmetric accumulation was in full swing, and power was shifting beneath the surface. By 1912, the tone turned darker. German bankers were discussing financial warfare behind closed doors, how to use gold flows as leverage, how to trigger bank runs in London, how to destabilize sterling without firing a shot. There were documents, minutes from banking conferences in Berlin, private correspondence between German financial officials, strategy papers from the Imperial Treasury. They were laying plans for economic war 2 years before military war began. 2 years of preparation, 2 years of positioning, 2 years of building the weapon. Stage 3 was clear. Strategic repositioning was complete. The trap was set. August 1914, World War I begins. Everyone remembers the military side, the trenches, the battles, the soldiers. What most people miss is what happened financially. Germany moved immediately to freeze British assets held in German banks. Gold was pulled back from London. And that shock helped trigger a massive liquidity crisis. The Bank of England nearly collapsed in the first week of the war. It wasn't bombs. It wasn't a battlefield loss. It was bank runs, financial contagion, and the economic weapon Germany had been constructing for years. Britain had to suspend gold convertibility just to keep the system alive. It had to plead with the United States for emergency funding. It had to walk away from the very framework that made it a superpower. And its economic dominance cracked almost overnight. The pound never regained its old status. Within 30 years, the dollar displaced it as the world's reserve currency. Stage 4 landed. The cycle ended exactly as intended, exactly as engineered. Now watch the same blueprint unfold on a larger stage. Same order, same steps. New players, America and Japan. 1950 to 1990. After World War II, the United States helped rebuild Japan and turned it into a trading partner and economic ally. From the outside, it looked flawless, mutually beneficial, a showcase for global cooperation. America received cheap manufactured goods electronics, cars, textiles. Japan gained access to American consumers and American capital. Both sides boomed. Stage 1 was set: deep interdependence, enormous trade flows, mutual benefit, everyone winning. But starting around 1960, the shift began quietly, subtly, almost impossible to detect at first. Japan started accumulating dollars, not merely earning them through trade, stockpiling them in huge quantities. By 1985, Japan held over $300 billion in U.S. on the RE, currency reserves and treasury bonds. 300 billion. That's serious leverage, and they didn't stop there. Japanese corporations bought American real estate and assets, Rockefeller Center in New York, Pebble Beach Golf Course in California, Columbia Pictures, American Icons. Americans called it investment. They shrugged it off as wealthy Japanese buyers collecting trophy properties. It wasn't just investment. It was positioning. It was turning dollar reserves into hard assets. It was preparation. Stage 2 confirmed asymmetric accumulation approaching critical mass. The balance of power shifting where few could see it. Then in 1985 came something that looked, on paper, like cooperation, the Plaza Accord. The United States, Japan, Germany, France, and Britain agreed to coordinate currency policy, manage exchange rates, promote stability. That's what the press releases said. That's what politicians repeated. But the reality was sharper. Japan used its leverage, its built-up reserves, and growing economic weight to push America toward a weaker dollar and to bend global currency dynamics in Japan's favor. This wasn't partnership. It was a power demonstration, a warning shot. By 1987, Japan was openly laying groundwork for a post-American economic order expanding Asian trade networks, building yen-based settlement systems, floating the idea of replacing the dollar as Asia's reserve currency. Stage 3 was underway, strategic repositioning in motion, the weapon taking shape. Then came October 1987, Black Monday, the worst single-day stock market crash in history at that time. The Dow Jones plunged 6% in one day. In a single day, over $1 trillion in market value evaporated, gone. Was it random panic, irrational crowd behavior? No. It was triggered by coordinated selling from Japanese institutions, mass liquidation of American assets, converting into yen and gold all at once. All synchronized. They tried to bring down the American financial system, and they almost pulled it off. Banks failed. Brokerages collapsed. The whole structure swayed on the edge of total breakdown. America survived by inches, only because the Federal Reserve stepped in with unprecedented liquidity injections. Only because it printed money faster than the crisis could spread. But the message was unmistakable. Crystal clear. Impossible to deny. Japan had the ability to wreck American markets whenever it wanted. They had the leverage, the positioning, the weapon. Stage 4 was attempted. The pattern nearly closed. Japan proved the model works. They didn't fully dethrone America, but they proved economic warfare can be more effective than military warfare. They showed that financial weapons can be stronger than armies. And China was watching, studying, learning, taking notes, planning. Now let me show you the most recent case, the one that matters most, the one that reveals what's coming next. Europe and Russia. 2000 to 2022. After the Cold War, Europe rebuilt its ties with Russia. Massive natural gas agreements, oil imports, deeper trade integration, an expanding economic partnership. Germany became heavily dependent on Russian energy. By 2015, 65% of German natural gas came from Russia. By 2020, Italy, 50%. Poland, 40%. Europe's industrial engine was running on Russian gas. Stage 1 was locked in deep dependency. Enormous profits on both sides. The relationship looked permanent and mutually beneficial. European leaders gave speeches about how economic ties prevent conflict, how trade makes war obsolete, how energy partnerships create peace. They were repeating the same mistake, the same illusion, the same fatal error. But Russia was building leverage. Between 2000 and 2020, it accumulated over $600 billion in foreign reserves. It systematically reduced dollar exposure and increased gold holdings by 300%. They weren't simply trading. They weren't just earning. They were preparing, building a war chest. Assembling the weapon, Russian state banks began developing alternatives to SWIFT, the Western payment network that handles trillions in daily transactions. They built SPFS, their own financial messaging system. They coordinated with China on cross-border payment systems. Almost nobody paid attention. Western analysts brushed it off as insignificant, as Russian paranoia, as irrelevant. They were wrong. Stage 2 was confirmed, asymmetric accumulation was complete, and power was shifting out of sight. Then, between 2020 and 2022, Russia made targeted strategic moves. It restructured debt, diversified reserves away from Western currencies, and built stronger economic relationships with Asia, the Middle East, and Africa. They were preparing for separation, for sanctions, for economic war for the moment they would trigger Stage 4. Western intelligence agencies saw the military buildup near Ukraine, satellite images of troops, tank movements, supply lines. But they missed the financial buildup everywhere else, the economic preparation, the strategic positioning. They were watching the wrong place. Stage 3 was confirmed. Repositioning was finished. The trap was set. February 2022, Russia invades Ukraine. The West responds immediately with massive sanctions, the largest sanctions package in history. They freeze Russian reserves. They cut Russian banks from SWIFT. They ban Russian oil and gas exports. They seize Russian assets around the world. They think they've won. They assume the Russian economy will collapse in weeks. They hold press conferences and declare victory. And then something shocking happens, something that exposes the entire pattern. Russia doesn't collapse. The economy doesn't implode. The ruble crashes at first, then rebounds within months. Within 6 months, the ruble is stronger than it was before the war. How? How is that even possible? Because Russia had prepared for years. They built alternatives to SWIFT. They diversified their reserves. They reworked their economic model for this exact scenario. They saw the pattern. They learned from history. They positioned themselves perfectly. Then they trigger stage 4, the controlled demolition. They turn energy into a weapon. They cut gas flows to Europe not completely. Just enough. Just strategically. Maximum pain. Maximum leverage. It sparks an energy crisis. Drives European inflation into double digits. The highest in 40 years. Triggers a recession. And crushes industrial production. German factories shut down not from bombs, but from no gas. No energy. No power. Economic dependency becomes a weapon of war. Exactly as the pattern predicts. Exactly as history shows. Stage 4 is in motion. The controlled demolition is underway. Europe suffers. Russia survives. Europe's economy is damaged for years, potentially decades. Industrial production down 30%. Energy prices up 400%. Growth collapses. And all of it happens without Russia firing a single shot at a European target. It's done through economic warfare, through weaponizing dependency. The pattern works every time, without fail, without exception. 3 historical examples, 3 different eras, 3 different powers, different continents, different contexts, same pattern, same sequence, same outcome. And now China is running the same playbook, only bigger, more sophisticated, more destructive, more complete. Now let me show you what's happening right now and why you should be terrified. Stage 1 was completed between 1990 and 2010. 20 years of groundwork. America opened trade with China after decades of isolation. It brought China into the global system, made it the world's factory, outsourced manufacturing, transferred technology, and built supply chains. Trade exploded from billions to trillions each year. American companies moved entire industries to China: textiles, electronics, pharmaceuticals, everything. China accumulated dollars on a massive scale and became America's factory and America's banker at the same time. Everyone got rich. Corporate profits surged. Chinese wages rose. Consumers got cheap goods. Politicians in both countries celebrated the partnership. It looked permanent, mutually beneficial. Unbreakable, the foundation of a new global order. Deep interdependence check. Stage 1 complete. Stage 2 began in 2010 and accelerated through 2000 and 2010 years of accumulation building leverage. Stacking advantages. China didn't just collect dollars. It built up $3 trillion in foreign reserves. $3 trillion. It became America's largest foreign creditor, bigger than Japan, bigger than all of Europe combined. But it also did something else, something more strategic, something more dangerous. They built a parallel system, an alternative structure, a replacement for the entire Western economic order. The Belt and Road Initiative, announced in 2013, now has over 150 countries participating, with $1 trillion invested, creating trade routes that bypass Western systems entirely. Roads, ports, railways, pipelines linking Asia to Europe to Africa, built with Chinese financing, Chinese construction, Chinese standards, Chinese currency. The Asian Infrastructure Investment Bank, created in 2016, competes directly with the World Bank and IMF, offering alternatives to dollar-based financing, with over 100 member countries. And the digital yuan, launched in 2020, is a central bank digital currency designed to bypass SWIFT, bypass Western sanctions, bypass the entire dollar system, and create a separate financial structure. China wasn't simply trading with America. They were building the replacement, the alternative, the weapon. They were preparing for separation while everyone else assumed it was cooperation. Asymmetric accumulation complete. Check. Stage 2 verified. Stage 3 is happening right now. From 2022 to the present, and this is where it becomes truly terrifying. In the last 24 months, China has restructured $8 trillion of its economic position. $8 trillion moved, repositioned, reworked. So what does that actually mean? What's happening underneath the surface? What mainstream coverage isn't spelling out? They've reduced U, S, Treasury holdings from over $1 trillion to under $800 billion. That's roughly a $200 billion drop in just 2 years. They're selling American debt steadily and quietly, without triggering panic. At the same time, they've increased gold reserves by 70% officially. Official numbers say they hold 2,000 tons, but unofficial estimates from commodity traders say 5,000 tons, maybe more. They're buying every ounce of gold they can get, paying premiums, avoiding public markets, accumulating in silence. Why? Because they're preparing for a gold-backed currency system, a direct challenge to the dollar's fiat dominance. They've signed currency swap agreements with over 30 countries, bilateral deals that allow trade in yuan instead of dollars. Russia trades in yuan and rubles. Saudi Arabia buys oil in yuan. Japan and Brazil use direct swaps. Argentina, the UAE, Pakistan, Thailand bypassed the dollar entirely. Building alternatives, preparing for separation from the Western financial system, they've built SIPS, the cross-border interbank payment system, a direct alternative to SWIFT, already processing billions daily. In 2022, CIPS handled 100 trillion yuan. In 2023, 150 trillion, a 50% increase in 1 year. This is not experimental. It's fully operational, scalable, and ready to replace SWIFT when Stage 4 is triggered. They've also been stockpiling critical resources at unprecedented levels, oil reserves near 200 days of supply, strategic metals like copper, lithium, cobalt, rare earths, and record food and grain reserves. This isn't normal hedging. It's preparation for disruption, sanctions, separation, and prolonged economic conflict. Every stockpile points toward one scenario: economic war. But the most important move, the one that reveals the timeline, happened in November 2023. China ordered all state-owned enterprises to divest from Western markets within 3 years. Not guidance. An order. Mandatory. Enforced. Roughly $8 trillion of Chinese institutional capital in Western stocks, bonds, real estate, and private equity must be liquidated by November 2026. $8 trillion exiting Western markets is not diversification. It's preparation for total separation. Strategic repositioning is complete. Stage 3 is confirmed. We are in the quiet phase before the storm. The setup before the strike. The positioning before demolition. Stage 4 is coming. Not maybe. Not possibly. Will. The only remaining variable is timing, and now we have it. When divestment finishes, China's positioning is complete. That's when they're ready. Here's what Stage 4 looks like when China triggers it. This is not abstract. It's specific, coordinated, planned. China executes 3 moves simultaneously, each reinforcing the others, each designed to leave no escape route. This is how the demolition begins. First, they dump you. SREDA. Treasuries, not the $200 billion already sold, but the remaining $800 billion in a coordinated wave. Bond market seize. Rates spike instantly. The U.S. government can't finance debt sustainably. The Fed faces a forced choice: allow depression through soaring rates or print money and ignite inflation. Either path detonates the system. Second, they'll trigger a supply chain crisis deliberately, strategically, ruthlessly. China controls 60% to 90% of critical manufacturing: semiconductors, pharmaceuticals, medical devices, rare earth elements, solar panels, batteries, electronics. They won't cut exports entirely. Instead, they'll tighten flows selectively through licenses, inspections, delays, and reviews, creating shortages, panic, and price spikes. Third, and this is the clever part, they'll offer an alternative, a new system, a replacement, a lifeline, UN-based trade settlement without dollars, CIPS instead of SWIFT, digital yuan for international transactions, gold backing for credibility, better terms for countries that switch. Dozens will accept it not by choice, but necessity, because the dollar system will be in crisis. That's Stage 4, the controlled demolition. The collapse of Western financial dominance, the end of dollar hegemony not through war, but through economic warfare, through weaponized dependency. 30 years of preparation. The pattern predicts it. History confirms it. The timeline is visible. The demolition is approaching, undeniable, inevitable. Now here's what everyone gets wrong, the comforting lies people tell themselves. These are the delusions that bankrupt nations and individuals. The stories that feel safe, rationale, soothing, but are historically fatal. Every cycle produces them. Every collapse is preceded by them. And right now, they are everywhere. Repeated by experts, politicians, and investors alike. Lie one, this time is different. China needs America as much as America needs China. Mutual dependence prevents conflict. Economic ties create peace. Wrong. Germany needed Britain in 1914. Japan needed America in 1987. Russia needed Europe in 2022. They acted anyway. Interdependence doesn't prevent conflict. It creates leverage. And leverage becomes the weapon. China has been building alternatives for 15 years. The Belt and Road Initiative opens markets across Asia, Africa, and Latin America. They don't need the American consumer the way they once did. They're prepared for separation, positioned for it. America is not. That imbalance is the danger. That's where the weapon is aimed. Lie two, the dollar is too big to fail. It's the reserve currency. Everyone needs it. It can't be replaced. Wrong again? The pound sterling held that role for 150 years, until it didn't. Reserve status is conditional trust. Discipline. Stability. U.S. Debt is 124% of GDP. $34 trillion. Rising fast. Interest payments exceed $1 trillion per year. Trillions are printed. The currency is debased. Sanctions weaponize the dollar. Every asset freeze proves why alternatives are necessary. China is building one now. Digital yuan processed over $250 billion in 2023. Over 40 countries are testing or using it. Dollar dominance is ending in real time. Lie 3, America can respond. We have the military, the technology, the innovation, the economic power. We'll adapt and stay on top. This is the most dangerous lie, the most fatal delusion. The response time is too slow. The dependency is too deep. The leverage is too large. Look at Europe and Russia. When Russia cut gas flows, what happened? Could Europe respond effectively? No. They couldn't replace energy fast enough. They couldn't rebuild infrastructure in months. They couldn't find immediate alternatives. They just suffered for years. America faces the same problem worse. China controls the supply chains, controls the manufacturing base, controls critical resources, controls the dependencies America built over 30 years. If China triggers stage 4 tomorrow, can America replace Chinese manufacturing quickly? No. Not in months. Not in years. Maybe not even in a decade. Semiconductors take years to fab. Pharmaceutical supply chains take years to rebuild. Rare earth processing takes years to establish. You can't relocate it overnight, and the military doesn't solve this. You can't bomb your way out of a supply chain crisis. Technology doesn't help when the semiconductors are made in Taiwan and China, limits Taiwan's options through economic pressure. Economic power doesn't help when your economy runs on debt and your creditor is also your adversary. The response options are narrow. The damage is unavoidable. The pattern keeps moving. Here's the reality: nobody wants to face the truth that's too uncomfortable to admit. Stage 4 is coming. Not might come, will come. The pattern is absolute. The sequence is inevitable. The preparations are complete. China is positioned. America is vulnerable. The timeline is set 2026. Remember it? That's when everything changes. Every day that passes, China builds more leverage, develops more alternatives, strengthens more relationships, and prepares more thoroughly every day. America adds more debt, deepens more dependencies, loses more manufacturing, and becomes more exposed until the moment China decides the leverage is sufficient. The alternatives are ready, and the timing is optimal. Then they trigger stage 4 and Western markets collapse. Not might, collapse will collapse. Not opinion, not speculation, pattern recognition, based on 3 historical examples with the same outcome. So what do you do? How do you prepare? How do you position? How do you survive? What's coming? First, understand the timeline. China ordered divestment by 2026. That's the window. Between now and late 2026 is the maximum danger period. It could come earlier if something accelerates the timeline. It could come slightly later if they need more preparation. But that's the range when stage 4 is most likely to hit. Second, reduce exposure to assets that rely on Chinese manufacturing, Chinese cooperation, or dollar dominance. Most Western stocks are exposed because their supply chains run through China. Most bonds are exposed, especially government debt that China holds. Major city real estate is exposed too. As foreign buyers disappear, when stage 4 hits, these assets don't correct. They don't adjust. They crash. Third, shift toward assets that benefit from economic separation, supply chain breakdown, or a weaker dollar. Defense contractors tend to surge when conflict rises. Domestic manufacturing benefits as reshoring accelerates. Energy independence becomes urgent as countries scramble for self-sufficiency. Food security becomes strategic and agriculture gains importance. Gold and hard assets hold value when currencies falter. Fourth, diversify away from pure dollar exposure. Not in one panic, move strategically. Gold, the classic crisis hedge. Bitcoin, a decentralized alternative to government currency. And foreign currencies from neutral countries, Swiss francs, Singapore dollars, assets positioned outside the American system. Fifth, prepare for supply chain disruption in real life. Not just on paper. Stock up on medicine 3 to 6 months. Buy critical electronics now. Prices will spike on essentials. Whatever your daily life depends on, secure it before the shock. These aren't predictions. This is pattern recognition, understanding what stage 4 looks like from precedent, and positioning before it's obvious, before the panic. Before the crowd, the insiders are already moving. You can see it in the numbers. Central banks are diversifying reserves, buying gold at record levels, and reducing dollar exposure step by step. Billionaires are relocating capital. Family offices are shifting allocations. Private equity is unwinding China exposure. Smart money is rotating out of U.S. equities. Mutual funds are cutting risk. Hedge funds are buying protection. Derivatives markets are pricing in stress. They recognize the pattern. They're acting on it. They're positioning for stage 4. The only question is whether you will too. Because here's what happens to people who ignore the pattern, who insist this time is different, who assume the system will protect them. They lose everything. Not some of it, everything. The Dutch merchants holding tulips were wiped out overnight. The British investors holding pounds were destroyed in months. The Japanese real estate speculators lost decades of wealth. The European manufacturers dependent on Russian gas were crushed in a year. All of them believed the system was stable. The relationship was permanent. The crisis wouldn't reach them. Every one of them was wrong. Every one of them paid for it. Every one of them learned the pattern the hard way. The pattern doesn't care about beliefs. It doesn't care about hope. It doesn't care about wishes. It only responds to mathematics, leverage, timing, and preparation. And right now, the math favors China. The leverage sits with China. The timing is China's decision. The preparation is finished. Stage 4 is coming. The $8 trillion move is done. The positioning is locked. The trap is set. What comes next reshapes the global economy, breaks Western financial dominance, shifts wealth and power from America to China, ends the dollar era, and begins something new. Not through war, but through economics, through the same pattern that's worked 3 times before. Through inevitability, the only question is whether you'll see it early, whether you'll position for it, whether you'll survive it, whether you'll profit from it, or whether you'll be another victim. Another statistic, another person who ignored the pattern until it was too late. History is screaming the answer. The data is flashing the answer. The pattern is revealing the answer. China's $8 trillion move will collapse Western markets. Not might. Not maybe. Will. The sequence is set. The stages are clear. The trigger is ready. The countdown has started. What you do in the next 12 months shapes the next decade of your financial life. Subscribe right now. Hit that notification bell because part 2 is coming. And in part 2, I'm breaking down exactly which sectors collapse first, which assets survive, which countries benefit, and the precise timeline of how stage 4 unfolds week by week. I'll show you the specific stocks that surge when reshoring begins, the exact commodities that spike when supply chains fracture, and the particular currencies that survive when the dollar fails. Because what's coming changes everything you think you know about investing. Economics, the global order, and America's role in the world, and the people who understand the pattern will be the only ones left standing when it's over. The collapse is inevitable. Your response is optional. Choose wisely. Position correctly. Act decisively. Time is running out faster than you think.